Hi guys, this is Mark Shaw's the Pattern Trader here, and currently the New Zealand dollar and the Australian dollar are sitting on two-year lows versus the US dollar and against most other currencies. Also, I'm noticing some very bearish price patterns appear in the stocks of Caterpillar, Boeing, Alibaba, Weibo, and some other stocks. So what is the common theme that links the weakening New Zealand dollar, the weakening Australian dollar, and some of these bear patterns in some of these major stocks? Well, last month we had a decline in sales. A couple months ago we had a decline in manufacturing in the Chinese economy. And this month almost $200 billion of tariffs are set to go in effect against the Chinese economy that is inherently looking like it's weakening. And so again, I don't really look at events, I don't really look at economic information, but when you have a convergence of a fundamental picture with technical price action, that's very often when we have some gigantic moves. So I'm going to keep an eye on this emerging story on the link between the New Zealand dollar, the Australian dollar, and some of these other stocks. I will do a deeper dive. I will do a deeper analysis and send you a link to a video where I actually analyze the chart patterns of these respective currencies and stocks as they track against what appears to be a more vulnerable and weakening Chinese economy. And again, $200 billion of tariffs are set to go into effect against China this month. We'll see how that plays out. But right now, everything is in the price, and the price action of these respective charts look dismal. So again, like I said, I'm going to do a deeper dive. I will do a more extensive, more elaborate chart analysis on each one of the pairs and stocks that I mentioned and send you a link to that. But this is a theme that I'm going to keep an eye on. And very often when we can identify these broader themes, this is what translates to potentially enormous opportunities. So I'll keep you posted on my thoughts going forward. Okay, until next time, take care. Bye-bye. Hi guys, this is Mark Shaw's the Pattern Trader here, and I wanted to point out something that I see very interesting starting to occur in the market. In the currency pairs of the Australian dollar, New Zealand dollar, and also in the stocks of Caterpillar, Boeing, Baidu, Alibaba, and Weibo, among others. Now, what do these currencies and stocks all have in common? Well, they're all somewhat or very dependent on the performance of the Chinese economy. Last year, the Chinese economy GDP was about 6.9%, and this year it's projected to go down to about 6.5%. More recently, the numbers out of China have been very disappointing in the manufacturing sector as well as the sales sector. So I'm going to go through the charts of the Australian dollar, the New Zealand dollar, and some of these other stocks to see how they're performing and see how they may be linked to China. Now remember also that President Trump has threatened China with $200 billion of new tariffs on their imports that are supposed to go into effect this month of September. And again, we are seeing that prices are being reflected in the market. So as you guys know, I only look at price action, but with the fundamental backdrop that we are looking now, when the fundamentals and technicals come together, we could have an enormous opportunity here. So I'm going to begin by looking at the Australian dollar versus US dollar. This is a weekly chart. And as you can see, prices have declined to almost a two-year low. Prices not seen till 2016. So we're sitting on this ledge at or near the 71 price level. Now this all started with this double top price pattern. And a double top is just like what it sounds like. It's an M top. It looks like the letter M. And when we see these price patterns, they then indicate the next direction of trend, which again, with this bear pattern, the double top, the next direction of trend would be lower. So now this brings into play the old support price levels going back all the way to 2016 at the 6,800 level as the next objective in the Australian versus US dollar. And it looks like we are well on the way to that price target. In this chart, I'm looking at the New Zealand dollar versus the US dollar. This is a weekly chart. And as you can see, with the New Zealand dollar, we pierced through 2-year levels quite some time ago as we went under the 68 level. And now we're sitting at new lows at or near the 6,500 level with the profit objective of 6,200 coming well into being here. So we can see that again, this double top price pattern in the New Zealand dollar, as I've been pointing out to my members for many months now. I felt that the New Zealand dollar is on a relative basis one of the weakest currencies on the board against the US dollar, as well as against most of its trading partners. And we can see that with the New Zealand dollar making new lows, that we are well on our way to lower prices in the New Zealand dollar. Now, there's also the interest rate differential between New Zealand dollar and the US, where New Zealand is keeping their interest rates pat at 2-year lows and even threatening to lower their rates, while the US is raising their rates. But again, I'm looking at these currencies and these charts going forward as they may correlate to the Chinese economy and the slowdown that is going on there. So again, we're trying to draw some hypothesis with what's going on in the price action and some larger world events as a backdrop. In this chart, I'm looking at the price movement of the stock Caterpillar, ticker symbol CAT. Now, Caterpillar is extremely dependent on exports, particularly to countries like China that have had a huge construction boom over the last 10 years, and it's been one of the biggest markets for this company. Now, if we examine the price chart of Caterpillar, we can see all the way back in this time frame a nice double top at or near the 172 level, and we can also start to see a descending pattern, a pattern of lower highs against a horizontal low, forming this descending triangle. So you can see now that we are at or near the base of this descending triangle, trading right now at about 137. I'd say the base of this triangle is around the 132, and we seem like we're now back on a trajectory to the lower end of this triangle. Now, a descending triangle is also known as a reversal triangle, and while you can't see it on the chart, this has been a long-term uptrend into this triangle, and if we start coming out the other way, this will indicate a reversal of trend. So again, I'm not making any prognostications. I'm looking at these price patterns and trying to be objective and also examine the commonality behind these currencies and the price charts of these stocks that are very dependent on the Chinese economy. In this chart, I'm looking at Boeing, ticker symbol BA. It's expected that over the next 10 years, about 50% of Boeing's sales will be to China. And if there is a slowdown there, we can all expect that the stock will suffer. On a technical basis, we can see all the way back in this time frame a head and shoulders formation, and then a number of these overhang where the stock has not been able to make any progress above the 350, 360, or 370 price level. Every time we come there, the stock is prone to sell off, and now we have a long-term support level at or near the 320 level. So again, the stock has not been able to make progress. More recently, we see coming into play a small double top right at or near the 355 price level. We recently broke under the neckline of this pattern, and we'll have to keep an eye on what's going on there, but it does feel like there is an inherent overhang in the technical picture of Boeing, And again, we'll have to measure it against the performance of the Chinese economy going forward. In this chart, I'm looking at the stock Alibaba, ticker symbol BABA. And this is the Amazon of China. It's a giant e-commerce machine out of China. Very successful company. Again, it's an Amazon-like replica. And when we look at the price history of Alibaba, we can see what appears to be or could be a large distribution that's been going on for quite some time between the $165 and $200 price area. And if we look a little closer, we can see the double top right at or near the 210 area. Now coupled with these shoulders here, this forms what's called a complex head and shoulder, where there's more than just one shoulder. In this case, we have two shoulders on the left side, three shoulders on the right, and we have a complex head and shoulders price pattern emerging in Alibaba, which has extremely bearish implications. This entire double top head and shoulders formation has a neckline at or near the 165. A neckline is simply a line that is drawn through the entirety of the price pattern. And again, any penetration of this 165 neckline could bring with it very bearish implications for the stock of Alibaba, ticker symbol BABA. In this chart, I'm looking at Baidu. Baidu is another internet-related and artificial intelligence-related company out of China. And we can see some fairly ominous trading picture come into play with Baidu in the form of this triple top price pattern right here. We recently broke beneath the neckline of this triple top at or near the 235 price level. You can see that we tried to retreat and go back to the neckline, which is typical of price behavior. And now with this key reversal coming today from the 230 all the way to 221, it looks like we could go back to the neckline of this long-term distribution pattern at or near the $207 area in Baidu. So if we crack this neckline again, it would portend a very ominous picture for Baidu. Lastly, I'm going to finish up by looking at the price chart of the stock Weibo. This is a social platform out of China. It is one of the most popular social media platforms out of China. And again, we examine the price history, and it looks like Weibo has broken down some time ago out of what appears to be a long-term distribution in the form of this triple top. We also had a head and shoulders with a common neckline at or near about the $107 area. You can see that we are way below that, and you can see what happens when we crack the neckline of these long-term distribution patterns. So as in the case of Baidu and Alibaba, we are approaching the neckline. It looks like we surpassed, or it went way beyond the neckline some time ago in Weibo, and it feels like this stock has nowhere to go but lower by virtue of the price patterns we're looking at. So again, I'm just trying to weave together what appears to be a gathering theme based on the slowing down of China. There appears that there will be economic and trading opportunities, and I'm going to be keeping an eye on that. And I will keep you posted as events unfold. So I hope you got a ton of value out of this video, and if you have any questions, let me know. All right, I'll see you all soon. Thank you very much.